Welcome to Profit and Prosper, a podcast for entrepreneurs who are ready to make some money while doing what they love. On this podcast, we're going to pull back the curtain and talk about all things business and money, but I promise you this is not your typical boring numbers talk. I'm your host, Sarah Young, a CPA and CFO with over a decade of experience in finance, business, and leadership. I'm going to share everything I've learned from helping my clients grow more profitable businesses and keep more of what they earn while growing my own successful business along the way. You'll feel empowered and confident that you too can grow your wealth, live a rich life, and have an impact. Stick with me and you might even start to think that finance is fun. Let's dive in. Welcome back to this week's episode of the Profit and Prosper podcast. In the first 5 episodes of the podcast, we talked more about high-level financial strategy topics, but today I want to switch gears and talk about something a little bit more tactical that you could go and implement in your business in the next week that will help you put your money management on autopilot. This is one of my favorite systems to implement with new clients when they come in, when their finances feel messy and they don't feel like they want to keep up with a budget. This system will help you manage your cash flow without necessarily having to have a budget. Before we jump into the episode, I want to let you know that I have started a new weekly email series that will come out every Monday. Because I have just enjoyed doing the podcast and teaching you all these topics so much, I want to go even deeper. So in my weekly email series, which is called Profit and Prosper, the Millionaire Monday edition, you are going to get extra content every week in your inbox on Monday, specifically answering the question of how do you use your business to generate your first $1 million in net worth or your next $1 million. And before you tune me out thinking, oh, $1 million, that seems out of reach, that's unattainable, I don't need $1 million, you probably do. In order to retire with the cost of living the way it is and inflation the way that it is, we all are probably going to need $1 million, if not more, in our bank accounts to retire or relax, especially if you want to relax early like me. So go and sign up for my weekly email series. You will find it at the link in my show notes, and I will be in your inbox with an extra exclusive weekly email on Mondays. All right, here we go. The way that you make your money management system easier and to put it on autopilot is to set up a system of bank accounts for your business that enable you to give your money a job. So what are most of you probably doing? I'm willing to bet money that at least 90% of you listening to this podcast have one primary business checking account, and you might have a business savings account, but you're probably not using it. The reason I say this is because the vast majority of clients, when they come into my one-on-one services or my program, this is how they have it set up. Here's why I don't like having all of your money sitting in one main pile in your main checking account. It is impossible to tell the difference between the money that you need to spend in the next month, for the money that you have to pay yourself, for the money that you need to set aside for taxes, to pay down debt, to save up a cash cushion, or do anything else. And you are constantly having to do math in your head trying to figure out, can I afford this? Because you can't clearly see how much you have for each bucket. You might also end up spending on things you don't actually need or can't really afford because you see this big balance in your bank account and you think, oh, cool, I've got $5,000. I can go spend $1,000 on this program or whatever, without actually considering, is this in your budget? And I know I said you don't need a budget to do this system, but when I say, is this in your budget, I mean, is it in your spending plan and is it something that is actually worthwhile to move your business forward? And you don't actually develop the habit of saving money which is what is going to help you build your net worth and grow your business, okay? So you might be thinking that I'm going to go tell you to implement the Profit First bank account system, which, side note, if you have not read the book Profit First by Mike Michalowicz, I hope I said that right, go and read it. It's a pretty quick read, and I really like his approach. In that book, he recommends, I think, 7 bank accounts. There's one for income, your overhead expenses, owner's pay, profit, taxes, and then he also wants you to have 2 extra savings accounts for profit, savings, and taxes at a separate bank account. And I will be honest, I think for most people that feels overwhelming, and it's not something that most people are willing to maintain on a regular basis. I personally actually opened up all of the bank accounts a long time ago because I wanted to test out the system. And this concept of giving every dollar a job is something that I have used in my personal budgeting system for years and years and years, because it helps you to assign your money and say, this is what this money is to be used for. This is a concept in personal finance called $0 budgeting, I think. I think I'm saying that correctly. So I implemented the Profit First system a long time ago, and over time, I've actually scaled it back some because I personally found that I just didn't need that many accounts. I think the important thing to remember is that with any system that you read in any book or listen to on any podcast, you have to take what works for you and then customize it and make it fit your needs for your business. So I do want to be clear, I always recommend people read the book because I do think it has really good principles, but in practice, maybe you customize it. All right, so what we're going to do is talk about the accounts that I think every business owner needs at a bare minimum in this episode and how to use them to manage your money without having to use a budget on a daily basis. So I do not have a budget for my business in the sense of I'm tracking every dollar that I have coming in against I said I would spend $50 on office supplies this month and I spent $52. Like, how horrible. I don't believe in that. Like, that is just not how I like to manage my money. I like it to be a lot easier. But to be clear, I do have a financial plan where I have forecasted out, right? These are my sales targets, my payroll, my marketing, my office expenses. I do have a plan, but I don't necessarily use that to get super nitty-gritty on how much I can spend on a regular basis in my business. So I just want to flip the script and help you think like you don't have to have a budget to successfully manage your money. Do you want to learn how to create a more profitable business without having to sell more? It's all about having the right financial strategy in place in your business. A strategy that will help you keep more of what you earn without adding to your stress level. Come and join my totally free 5-day Profit Boost Challenge, which kicks off on Monday, March 14th. In the challenge, you'll learn how to find more money in your business and boost your cash flow without having to sell more, how to get clarity and confidence in your financials so you feel ready to tackle your business goals, and how to manage your money with ease so you can build your wealth. Each day, you'll get an email with a video from me and a worksheet walking you through the day's assignments, which you'll be able to complete in 30 minutes or less. You'll also get access to a private Instagram account where I'll answer your questions and help you implement what you've learned. Visit profitandprosper.co/challenge or the link in the show notes to sign up today. So the process is going to be, you set up your bank accounts, you have to know some of your numbers. We're going to do an initial allocation of the money that's probably sitting in one account, and then we're going to talk about how to get into maintenance mode. All right, step 1, the very first thing you need to do is go set up some bank accounts. Now, if you like the bank that you currently use for your business account, great, go there. If you don't, this is a great time to make the switch. I will say the only caveat that I remind people of when they're setting up all these extra bank accounts is trying to work around bank fees, because some banks, every time you open an extra account, are going to try to charge you an extra bank fee. And so this may be a case where you have to call the bank and say, hey, I would like some extra accounts, but I really don't want you to charge me the fee. If you don't agree to this, I'm going to take my business elsewhere, right? They'll usually work with you. So keep that in mind. So you're going to set up your accounts, and in total, at a minimum, I think you need to have 3 business accounts and 1 personal account. The business accounts will be 1 for income, 1 account for overhead expenses, 1 account for savings, and then your personal account will be for taxes. So let's talk about what you use all these accounts for. First up, obviously, is your business income account. This one would be a business checking account, and you're going to use this to deposit all of the payments that your customers send to you. So you would take this and connect it to whatever your payment processor is, so you have deposits coming into this account. Then the next account is your overhead expense account. For this account, I like to use to pay my regular everyday expenses that I have in my business, and this also includes what I'm paying myself as a salary. So in the last episode, we talked about paying yourself and how, as the business owner, I really want you to think about 2 different ways you're paying yourself. One is you get a salary for doing the work in the business. The other thing is you get your profit distributions for being the business owner. So I have set up myself a monthly salary that I pull out of my overhead expenses because, again, in the last episode, I said this too. If your business can't pay you this overhead or the salary amount every month, then you've got to change something because your business is just not sustainable. And so you set your monthly salary, and this goes into your monthly overhead expense budget. So that's your second account you're going to use for expenses. Then you're going to have a third account for savings. And yes, this one would be a business savings account. This is where you are going to funnel extra money to set up a cushion in your business or an emergency fund. So at a minimum, you would need an income account, an overhead account, and a savings account. The income and the overhead accounts would be checking accounts. The savings account is a savings account. They're all 3 under your business name and preferably at the same bank so that you're not constantly having to transfer money between banks, because I think we all know that is sort of a pain. Now, the fourth account that you need is a tax account. This account does not have to be a business account, but it can be. I say that because this is one where if you need some leeway with having bank fees being charged for having a business account, make this a personal account. So unless you're a C Corp, which I think probably 95% of you listening to this podcast are not a C Corp. You are a sole proprietor, an LLC, an S Corp, a partnership. If so, if you're a C Corp, this doesn't apply to you. But for everybody else, you personally are responsible for the taxes on the profit that your business generates. Your business does not have to pay that tax. The IRS doesn't send a letter to your business saying you owe us money. They're going to hold you, the owner, accountable for paying those taxes. So I do think that your business needs to fund those taxes, but the business is not responsible for paying those taxes. So that is why I am totally fine with you having a free personal checking account in your name that you set aside for your tax account, for your tax money. I personally just have an extra checking account at USAA. That is where all of our personal accounts are held, or most of them. And that's where I just funnel my tax money and sit it over there, and I avoid the extra bank fees, okay? So income account, overhead account, savings account, and then a tax account. Those are your 4 accounts at a minimum. Now, if you want to go full on profit first, don't let me stop you, okay? Don't let me stop you. Go and do that if you want to test out the system and customize it for you. I'm just telling you what works for me and what works for a lot of my clients. Now, the only caveat quickly, and I don't want to go in too deep in this, is if you have an inventory-based business where if you have huge chunks of money coming out sort of sporadically to buy inventory, or if you have a contractor-based, a project-based business where maybe the client pays you a big chunk of money up front and then you have to dole that out over time to your contractors, you may want a separate bank account to cover that money for either inventory or contractors, because this I would put in a separate bucket from your regular ongoing overhead expense. The amounts are going to be lumpy compared to your overhead account should hopefully be fairly flat month over month. And you might also be thinking, what if I have a business credit card? That's totally fine. I personally put pretty much all of my expenses on a business credit card, but I still have my overhead account, and the money to pay off the credit card goes in that account. And when I look at my bank accounts in my bank app, I look at my credit card balance and my overhead account balance, and I never want my credit card balance to be more than my overhead bank balance. And I actually end up paying my credit card off more than once a month, usually at least twice, because it helps me mentally to see, okay, the money in my overhead account I'm using to pay off the purchases as I buy stuff so that you don't rack up a huge balance, okay? So step one, set up your bank accounts. I would get a piece of paper and write down, here's the list of accounts that I want to open, and go and do that. Step two is where you need to know a few numbers, okay? First and foremost, the main number that you need to know to get this system set up right now is how much do you spend in a given month? What are your regular monthly overhead expenses for things like payroll if you have a team, for marketing, software subscriptions, consultants, coaches, office expenses, just the regular everyday stuff in your business. Again, if you have inventory, big lumpy inventory purchases, or subcontractors who work on specific projects, I'd probably bucket those separately for purposes of everybody else. Just what is your regular monthly expenditure, right? I want you to have a ballpark of that number. And if that means you have to go back and look at the last several months of expenses to get a number, go and do that, because we are going to use that in the next step as we lay out our allocations. The other thing that I want you to know is, what is a savings target? I would recommend working up to having 2 to 3 months of your expenses sitting in that business savings account that I said you need to open. So once you know your regular monthly expenses, multiply that by 2 or by 3, and that is going to be your target savings balance. The last number that I want you to know is, what is your sales baseline? What can you reasonably expect to bring in a given month without having to overstretch yourself? I like to know this baseline number so that I can compare that to what my expense number is and make sure that in any given month, I will have enough income coming in to cover all of my expenses. Now, if you don't have this set up, then obviously something needs to change in your business model. We will talk about that in other episodes. All right, so step 2 is to know these numbers so that we can do step 3, which is our initial account allocation. So once you set up these accounts, what I want you to do is look at the balance you currently have in your bank account, and you have to decide, what is this money going to do? This is where we go back to our $0 or zero-based budget, where we take, let's say, $5,000 that's sitting in our main bank account. We're going to say, what does this money need to do between now and the time that I have my next income coming in? And we are going to physically transfer that money over into the respective bank accounts to make sure that we cover those things, okay? So your initial allocation is probably going to go something like this. I want you to think about, what are the upcoming expenses that you have in the next 1 to 2 weeks, or even in the next month if you have enough money in your account, and transfer that money into your overhead expense account to start. So let's do an example. Let's say you spend in a given month $5,000 is your regular average expenses, right? You've listed out everything that you regularly spend on. You come up to $5,000, and that includes your pay, okay? Now let's say that you have $7,000 currently sitting in your main bank account. You are going to take out of that $7,000 that's in your main account and transfer over $5,000 into your overhead expense account. And you have funded the entire next 30 days worth of your business expenses, and you don't even have to worry about it. How awesome would that be, right? So you know that you have the money sitting there, okay? This is how you can operate without a budget. So you figure out, based on the income, the regular sales you have coming in, what do you regularly spend money on? What's your average spending? And you say, this is what I'm going to transfer over into this account. And this is all you can spend. You can't spend more than that on your regular expenses. This is how you also know quickly if something is going off the rails, if you run out of money in this account. And you got to go dig in and figure out, what the heck did I spend money on? Okay. So you have your $7,000 in your main account. You're going to put $5,000 into your overhead expense account to fund the next month, and you're left with $2,000 in that account. Now, what do you do with that money? Okay. We're going to look at the other bank accounts that we have. Do you need to pay taxes? We are in February 2022. I guess it'll be March by the time this comes out. We're coming up on 2021 tax season. Do you owe money, or will you owe money for 2021 taxes? If so, you're going to have to take that money and pay taxes. Have you set aside money for taxes for the first few months of the year? If not, go and do that. If you feel like you're covered on the tax front, make sure you are covered for any debt payments. Do you need to make any debt payments, or do you want to funnel some money into your new business savings account? Or maybe you give yourself a bonus, right? Maybe you take out some extra pay as a profit distribution, right? This is why I like this system so much, is as we get to a place where we're able to maintain this on a regular basis, you transfer the money to cover your necessary buckets every month in your business. And then hopefully at some point you'll get to where you're actually left with money in that income account. And then you get to decide, what do I do with this, right? And I like to use that money to invest in things. This is your extra investment money for figuring out, what can I do with this money to give me the best return? Okay, so that's ultimately where we want to get to. I will say it will probably take a few months of monthly maintenance, which is step 4, to get the system down and get a good feel for how your money is flowing. But hopefully by doing this exercise, this should open your eyes to what is going on with your money so much more than it was when you just had it all sitting in a big pile in your account. So step 4 is maintenance, okay? Now, you can choose to do whatever works for you in terms of monthly maintenance. I personally like to do monthly maintenance if I can. In the Profit First book, he talks about doing twice monthly maintenance. So this is totally up to you. Here's what I do. After the initial allocation, so this episode will come out at the beginning of March. Let's say you have funded the entire March expense bucket. Then what you do is you let your March income come in and sit in your income account, and you do not touch that money until we get to March 31st. Or April 1st. I don't really care which, right? Sometime towards the end of the month or the start of the new month. You've let that income pile up in your account over the month, and you have stuck to spending what you put in your overhead expense budget, right? Then you do the same exercise. So we're at the end of the month. Let's say you had $10,000 come in the month of March. You've got to allocate that. So you take $5,000 and slide that over into your operating expense budget. You probably have to take a couple $1,000s and put that over in your tax account. Hopefully you put some money in your savings account, and then you get to decide, well, how do I allocate the rest? Do I take a profit distribution? Do I give myself a raise because I consistently have money left over? Do I want to invest in something? That is up to you to decide how to best utilize that money, okay? The Profit First approach, he actually uses target percentages. And I think in my experience, the percentages work for some, but they don't work for others. I personally have had a really hard time sticking to the target percentages because my business has grown very quickly. And I find that the targets change pretty drastically over time with what my business needs in one given month over another. So that's why I like to just say, like, here is my planned spending for the next month. I'm going to fund that. and then funnel the rest into other accounts or other investments as needed. So if you want to do the target percentage approach, just go out and Google Profit First Instant Allocation, and you should find a PDF where he walks you through that whole process. So you could also do that where you say, I'm going to take this % of my revenue and assign to my expenses, and this % for my pay, and this % for taxes. That's totally fine if you want to take that approach. I personally just don't feel like I need to go that far. All right. The last thing I want to touch on is how do you troubleshoot when you don't have enough money for a given bucket to fund the next month? How do you troubleshoot that? I think this happens a lot, right? I will say time and time again, you are going to have times where cash flow is really tight in your business. And I think especially if you're going from not having any real money management habits in your business to setting up this system, you are probably going to have, for the first couple months, maybe some tight spots. But here's what I'll say. You had this happening in your business before, you just couldn't see it. Now it's clear because you have separated out your money. You have given it a job. You said this $5,000 needs to pay for this, and that means I'm going to use this extra $2,000 to do X, Y, and Z. You're intentional with how you're spending your money, and you can see that very clearly now. So the way that you troubleshoot when you run out of money is you have to go back to the 2 cash flow levers, right? How do you increase cash flow in your business in the short term to solve this problem? 1, you increase your income, or 2, you cut back on your expenses. So if this is happening, I want to encourage you not to try to plug the holes with using your personal savings account or taking on debt. I think that is a reaction that we go to a lot. Instead, let's think about, well, clearly if we got to this place, something is not sustainable. Something is not working. So let's take a minute and see if we can figure out how to make it work, right? How do we increase our income? Or how do we cut back on our expenses? Or maybe even more realistically, do a combination of both to fix our cash flow problems in the short term without having a knee-jerk reaction of, let me go take on a ton of debt, okay? So let's cover really quickly, we'll recap. The process for managing your money on autopilot is this. Set up your bank accounts. At a minimum, you need an income, an overhead, a savings, and a tax account. Know your numbers so that you know about how much you need to allocate to each of these buckets going forward. Do an initial allocation to take the money that is in your main account and allocate it to each of the buckets. And then do monthly maintenance, where, this is the key part, your income for the month comes into the income account and you don't touch it until you are ready to assign it to do a job. So the income comes into your main income account, and then at your finance date, which is either monthly or bi-monthly, whatever works for you, you go through and you allocate the money from your income account to the overhead account, to your taxes, to your savings. And when there is money left over in that income account, that is when you can use it with intention to invest, to save, to pay down debt, or to pay yourself more money so that you can increase your overall net worth and wealth. And if you enjoyed this tactical tip for managing your money better, if this is something that you want to implement in your business to make better money habits and create a more profitable business and build your wealth, then I really strongly encourage you to come and sign up for my free 5-day Profit Boost Challenge. It is going to run starting in about a week and a half on March 14th. I'm going to give you 5 short daily assignments to help you implement better money management habits and help you increase your cash flow and put more money in your pocket. So if you enjoyed today's episode, definitely go sign up for that. You can find it at profitandprosper.co/challenge or at the link in the show notes. I'll see you next time. Thanks for listening to this week's episode. Now, I want you to go take some action. What's one thing you can do this week to create more profit in your business? Send me a DM on Instagram at YoungCoCFO and share your action item with me. If you have a question or topic you'd like me to dive into, or if you're feeling empowered about taking charge of your finances, let's continue the conversation. Go to profitandprosper.co to submit a question or topic for me to talk about on the show. And because we all profit and prosper better with friends, please leave me a review on Apple Podcasts, subscribe wherever you listen, and share the episode. Make sure you tag me at YoungCoCFO on Instagram so I can give you some love, and I'll see you in the next episode.